Sound check, mic check, 1 2 1 2. Could you all hear me? I think we're good on the sound. I know that JWC is having a little bit of trouble. If you are, just press refresh on your browser. If anyone else is, oh, there we go. All right, here we go. Listen, does anyone know what chart we're looking at over here? This is a pretty chart, huh? This is Bitcoin looking at the yearly lows. Makes it or puts it all in an entirely different perspective now, doesn't it? Beautiful, beautiful, beautiful thing to see over here. What do you think happens next? Can we speculate on what happens further? Look, if you, whoa, Jord. Let's get back into it. By the way, yesterday's session, some of you missed yesterday's session. That's okay. That was our first session of the new year, setting the tone for what's to come. I am so pumped up about 2022. It's ridiculous. You know, is it because of Bitcoin and what I think Bitcoin's going to do and Bitcoin things? Is it because of more of our ability, no matter what happens in 2022, that I believe that we are tighter and sharper than ever and are going to be able to go ahead and do what it takes to stay on the right side? Yeah, I think it's a lot of that. I think no matter what is thrown at I think whatever is thrown at us. Someone yesterday was saying, good morning, CTM. Good afternoon, good evening, that they were having a glass of wine in our late day session. And I was like, oh, that would be fantastic to be with all of you enjoying a glass of wine as we go ahead and do what we do. But yes, it is time to go ahead and get to work. It's today's session. I think yesterday's was fun in setting the tone for what's to come. Today's going to be a really good one. And we got some questions to go over. We got some more tighter presentations to make and to keep going. So we are going to do that. Thank you, Zax. Thank you, everyone. Boom, 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 boom. Bitcoin, yearly lows. What I want to do is just add in this little bit of a trend line like this. Height phase down over here, right? And we are going like this. Boom. It's pretty clear. It's pretty clear. Are there sometimes some bumps to the upside, right? What's going on, Jordan? Right? There's some bumps to the upside. Some bumps to the downside, right? It looks like we're headed towards a further bump to the upside, right? But nevertheless, we are, it makes me want to buy Bitcoin. I'll tell you that much when I look at the chart like this. All right. Where are we today and what's happening? And here's what we want to look at. I know that we've been looking at this chart, and this chart is basically like a little bit of hindsight of everything and the way we've done it. I feel like going ahead and adding this little bit of a metric to this chart over here, right? Showing when like this was the area when it was green, 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 green. I know it gets a little tricky because over here we did exit our first time, 58,500, but this was still a green area. I remember buying this dip aggressively, and it wasn't until we said something's not right, exiting it. And that was a red zone. And even though we called that line of repair, one of the lines of repair, and from the wick down, it did hold. It wasn't until we came towards this descending wedge and the breakout out that we became a little bit more, let's say, green lighted. Now, I was cautious. I stayed cautious until we came into the most important trend line in crypto. And on the first pullback, a lot of CTM was not. I know a lot of spot purchases were made down here, and I also know a lot of you leaned in with leverage down over here. I remained cautious because I did say that, look, things are unclear until we break above the most important trend line in crypto. I held to that until we tested it, and then I said that's the place to go ahead and take it. And then it was like more green light up until and throughout the correction of wave one, right? Up until we had that infamous day. It was another Friday. This was a Friday over here, May 14th. This was also a Friday. We did that CTM session later in the day. Price broke down. It broke down our technical break, 53,000. And then we again entered a red period, right? And then during this red period, we just now are breaking out of the correction of wave two. And I think that, how would you put this? I think that me personally, I feel like we're in a yellow period. I don't really feel like we're green lighted, that it's time to go ahead and start leaning in, let's call it aggressively, into any type of positions. I think that we are pretty much yellow lighted. Does this help everyone see a little bit more clearer about which phase we're in? And if we kind of check in regularly about which phase we're in, is that a little bit more helpful way to see it? I think it is. I think, Dave, I mean, it's a good question, David. And the answer to this is that it's different for everyone. And what do I mean by that? You should not be trading with any type of leverage and or margin unless you absolutely understand what you're doing. Now, I believe that you should be paper trading, and you could do that through TradingView alone, right? And I think that's the best way to go ahead and sharpen your skills so that you know when you're ready, right? Now, using the CTM course, we could start off risking 0.5%. David, so it doesn't matter how far away your stop loss is. Your stop losses, and on the next entry that we look at together, and when we're in this green period, almost daily and regularly, we are looking, and as those setups happen in real time and live, we are showing them each and every day. And when we're not live on a live stream, I go ahead and I tweet out the entries so that everyone, no matter what, is able to be there, right? But there's a difference between being ready to go ahead and lean in, and there's a difference between I'm not ready to be trading with leverage. I need to put more work in. I think that risking paper trading is the best way to begin. And then I do believe in, in a green phase, that risking 1%, I think that's a good way to go. I think that for a lot of people, you have to find out for yourself. But if you're risking 1%, there's a massive opportunity over there. For example, say your stop loss was $3,000, and that's 1%, right? So for every $30,000 Bitcoin goes up, you're talking a 10% gain. I think about it like, and you're not just taking that 1% position, you're taking multiple positions and then trying to push them as far as possible. So I'm going to go slow because there's a lot to talk about, and I want to make sure that I keep up with some of the comments. Bitcoin catching up to the 10-year correlation model. Today, pump seems interesting. Bernardi, this sets it off as far as where we are, and that is, well, let me pull up a chart, right? If you saw this chart over here that we put up onto Twitter last night, it's showing the 10-year in an ascending triangle, And which way it breaks, well, we really don't know that. It's 63% of the time it breaks to the upside. The measure move is from the horizontal over here to the low of the longest wave, and it would take us to somewhere about 2.38, right? Depending on where this broke down, if it broke down here, here, or here. By the way, 64% of the time, this goes to the apex of the triangle before breaking to the upside or downside. So is it quite possible as we come in, and I think in here today, we're getting closer to the top, that we don't break out yet and come back down and test down lower or break? All those things are still on the table. It's also the same measure move to the upside as for the downside target. So is Bitcoin catching up? I think the word of the day today, the first Tuesday of the new year, is volatility. And we could look at the NASDAQ for a second, and you can see that the NASDAQ is, what is that down, by the way? Let's see. So risk on, risk off. The question came up, what is risk on, risk off, in yesterday's comments on our live stream. Talk about that in a little bit. NASDAQ, where are you, baby? Down 1.7%. That's pretty substantial, but really we're just back where we were, call it a day ago or 2 days ago. And we are still holding, technically, that breakout of that conservative breakout. It's being tested over here. NASDAQ must be now off 2% off its all-time high. It's just volatile. Like there's people coming back, and there's still not. Just give it a little bit of time. Look for that clarity. Dollars unchanged on the day. We'll look at that in 1 second. S&P 500. So let me fix this. I was looking at this in 2 ways. Hold on 1 second. And then I come here this morning and it's broken. So I don't want to fix it while I'm on the phone with you. I was going to say, I don't want to fix it while I'm on the live stream with you. So I don't know if I should be looking at this in a log scale like this. By the way, this is the prime trend line I drew coming out of the November election. The triangle, the pendant that we had over here. And then this line over here, I was like, you know what? This is the line I want to make sure I'm using as the prime trend line. And I have the channel to the downside first. This is on a log scale though. If I take it off log scale, you can see the same angle holds, but this comes down a little bit. So I almost need to have this down over here. So I'm not sure if this should be right here on linear like this, right? And if that is, do I take this upper end, you all with me, of this parallel channel, and bring it down to the midsection over here, right? To that midsection. Let me do it really quick. So this makes a lot of sense to me. Here's that midsection acting as resistance, the upper end of the channel. Or are we looking at this on a linear scale and nice and neat in the channel? I don't know. I'm going to be looking at both of them for a while until I figure out. That's exactly what happened. You all remember as we broke down from 53,000 over here on that Friday. I was looking at linear log, and I didn't know which one I should be looking at. And if I don't know which one I should be looking at, I'm kind of going to be looking at them both, right? So S&P 500, though, it looks basically unchanged on the day. What's it off? It's off. Yeah, it's unchanged on the day. Is there anything to read into right now? I don't think so. It brings up the question, right? And it was a good question. I think it was asked yesterday. Let's go ahead and see. So let me go ahead and try this. No. There we go. I got it now. I got it somewhere, right? And the question was, are we expecting a correction in the markets this year, which will also bring down Bitcoin, right, due to tapering, etc. I was seeing a headline yesterday. Everyone's familiar with Gartman, right? And he's saying there's no question this guy has it's almost like a joke. He has such a poor history of timing the markets that he's like the best counter trend system there is. Probably would outperform anyone just counter trending this guy. That's just the truth of it. And he's saying there's no question the bear market hits this year, stocks are going to drop 10 to 15%. Is he right? He could be. There's no question about it. Could this be the one time that Gartman's right? Maybe. We'll find out. But a lot of people, I think, are expecting 2022 to be very difficult for the markets, almost like the time when the markets are going to come up and face reality. Well, I think the markets have been facing reality all of 2020, all of 2021. The reality is there's a massive amount of expansion of the central bank's balance sheets taking place. That is not yet stopping. The Fed is tapering purchases, right? And is the Fed going to be able to get through their taper? It probably, it looks like it. I think one of the biggest obstacles was the latest variant that, although is, they call it the Omni cold, there are people who still, get very sick and, as they did from the flu. But it's dangerous. There's no question about that. And you don't want to see anyone get sick or anything. But I feel like the market is moving past that piece of worry. And what the markets generally do is they climb that wall of worry, right? It's the steps up and then the elevator down. And when the markets are crashing, the markets are going to be crashing, right? So let me just go ahead and paint a picture for you really quick as we continue talking about that. Well, let me keep going, and then I want to finish this thought, specifically the question that Simon was asking over here. And by the way, well, I'm just going to keep it, let it come in. However it comes, this is how we're going to do it. Simon also asked, I am more fearing pending regulation regarding self-hosted wallets in 2022, with the FATF is trying to make governments implement, don't want to have spot Bitcoin trapped on exchange. Look, there's a lot to worry about always. Let me just go ahead and go through all of this. And I think that my mind is working almost in a roundabout tangent today. We're going to loop back to everything I was talking about as far as 2022 for the markets, and then also with risk on and risk off. But as far as, any type of regulation that comes into, I feel personally that the risk is for a lot of DeFi, a lot of altcoins out there. It's a big risk, and you never know what the SEC or anyone else is going to go ahead and do. That's a risk. And I think Michael Saylor has made the bullish case for Bitcoin. It's part of the reason for me why it's the most important trade that matters, right? It's about assessing risk. For me, in many, many ways, I've deemed Bitcoin to be the least risky trade out there. Now, does it offer an astonishing potential? It certainly does, and it continues to deliver, right? There are some people laughing at Bitcoin last year measured from the first of the year to the 31st of the year, and they're like, Bitcoin did like 60%. Okay, but it was the best performing asset for 3 years in a row. Still 60%. What's the average expected return of the stock market? It used to be 7 or 8%. I think now people are talking about like 10% as as they continue to go ahead and dilute the money supply. And then you see Venezuelan style, the stock market go up. It's not as if like these companies continue to be producing more value. A few of them do, but overall, you're just looking. Anyway, so I feel like if you have no control over what type of regulation is implemented, if they do, are you not going to be able to store Bitcoin offline in a hardware wallet? I feel like, and this is my own feeling. If you feel different, you don't have to agree with me. I hope that many of you don't agree with me often. That's not how this works. Now, I mean, so from time to time, some really good insight is shared, and I hope that is resonates with you and all that. But more importantly, we really work on how to think for ourselves, right? It's just looking at life a little bit different, not just the markets, but looking at life. And I feel like the Bitcoiners out there, there's some intellectual giants. Why I could go into a room most of the time and be able to, have a let's say more of an understanding of what takes place in all areas and aspects of Bitcoin than most people and or the market. There are some people who are so technically advanced, it's ridiculous. I couldn't even follow a conversation with them. But I feel like, is it okay to kind of like lean in and know that we're in this together and trust each other, and that like there are people out there working on solutions if need be? Yeah, I do feel like that. Is it possible that you would not be able to hold Bitcoin in a hardware wallet? I guess what exchanges could do is they could not allow you to withdraw to some type of unverified, hardware wallet. Does that make the case, if you're worried about that, honestly, that maybe you want to use something like Compass Mining, right? CompassMining.io, and go ahead and mine at home some Bitcoin that's KYC free. That might fit very well into your overall like strategy upon strategy diversifying, and you might want to have, just convert electricity into Bitcoin just to have some KYC for free Bitcoin. uh and I think I would be more worried about holding DeFi, altcoins, things. They basically want to know basically who is moving what. Could that be done with a hardware wallet that you own possession of the keys with? Yes, it could. Will you be required to go ahead and claim that? You're already required to claim all your addresses, right, on your taxes if you're in the U.S. So that's my roundabout explanation of that. I feel like a lot of people right here in 2022 are looking for some type of really, let's call it a bad year. I'm not in that camp. I do not have that feeling. I also remember back in 2020, like everyone thought there was like almost a 0% of any type of recession, right? So we'll see what happens. I don't think that we have any cause for concern. I do believe that Gartman could potentially be correct that if we do move to actually hiking, and or the pace of the hiking is quicker than anticipated, it is possible around that time, when we talked about it, there could be some volatility. We talked about going back to 2015 when they began hiking, and we looked at the volatility that occurred. By the way, this area over here, this is risk off. This is elevator down, right? This is what was happening over here that caused risk off. It was global lockdowns, right? And then you could see this is a risk off period. Now, there's another risk off period that happened right over here in 2018, right? This was into December, a risk off period in the markets. What was happening over here? Well, people were worried about the Fed hiking too much and too fast, which they did. December 2018, they made their last rate hike, a policy era. Also at this time, though, what was happening was Brexit. There was a lot of uncertainty out there, right? What's going on right now? What type of uncertainty are we looking at? Well, I think that people are realizing that, well, the Fed is actually tapering, right? Still an abundant amount of liquidity out there. China was this morning, by the way, they were not injecting as much cash as they've been. So we don't know how loose they're going to be, but we expect them to be easier here in 2022. But you have to follow what they do. What else is happening now? We have for sure the new variant and or any other variant that comes up. But we also know how this played out last year, right? It was around the holiday season, around the new year, where things really spiked up and got bad. And then, the seasonal virus type thing. It looks like that is pretty much out of the way. So are we in a risk off environment? I don't think so. I really don't think that we're in a risk off environment. We looked at, and I think it's very important just to mention one more time. Here's the dollar, by the way. The dollar finding support off our trend line, and it's just range bound. All right. And by the way, just to reiterate what our expectations were, right, breaking above this area was that we could be range bound between here and this area. So I don't think that, there's not much else to say about that. The 10 years is something else I wanted to look at, right? Because we're getting towards the top of the range. What I really wanted to look at was this. So let me go ahead and see if I can make this bigger. And that's right here where right now we see the Fed is tapering out, but still increasing the size of their balance sheet. That's going to go on throughout the first quarter. We know that last time we were in a similar situation to where we are right now, which was right around here, that as they began tapering and they tapered the whole thing, the next move was not a rate hike. The next move was another impulse of QE. It's interesting because, is the inflation transitory? It's not, in a sense that prices are not going to go back down. You all know that, right? So are those deflationary pressures going to be able to actually take hold a little bit more now in 2022? I don't know. I'm open to it. If you all are familiar with, I know many of you are, the Dr. Lacey Hunt, who for 40 years has been able to stick with and call the deflationary move. Now, going back into March, April 2020, I covered what he was saying at that particular time, and he felt that the massive bazooka expansion of the Fed's balance sheet was not going to be inflationary, right? So he's dead wrong for the last 2 years. So you have to keep that in mind. Let me go ahead and share this video with you. This part over here where I stopped it was listening this morning. I barely got through this video. What they were saying is a lot of people are comparing this to the inflation that was taking place in the 70s. Now, I don't think there's not been one time that we've done that. Our base case was, hey, follow the liquidity out there, follow the expansion of the central bank's balance sheets, and they just massively expanded. That's uber asset inflationary, right? Never once did we compare to what was happening in the 1970s and what they were saying in the 1970s, that the dollar was devaluing. Here we have the dollar appreciating. I don't know if that's a distinction that fits our ideas or narrative, but nevertheless, I really always want to understand, especially the viewpoint of people who have, let's say, an opposing opinion to my own. Let me go ahead and throw that in the chat in case anyone wants to get to follow along with that as well. And then also, while we're here, here's just an article reading about the FATF's latest guidelines. If someone wants to start reading up on that as well and has more questions about what we were talking about earlier. Bringing us back, or beginning, right? So risk on, risk off. During a risk on period, people are more willing to chase after yield. You see equity markets rising. You see risk off. I view, like, people will definitely go into the bond market and risk off. I personally like to go into risk off currencies, Swiss franc, Japanese yen versus the commodity currencies. Everything out there is pretty tightly correlated, so it's a question of the best way for you to play it yourself. There's an article over here that explains what we mean by risk on, risk off. So I'm going to include that one in for you, because I know the daily dose of Bitcoin, you were wondering a little bit more about when we're using those terms of what they mean. It is Taco Tuesday. I'm going to take a quick break over here. I'm going to drop some head snack, and then we'll come right back into it, because it is Taco Tuesday here at CTF.
Markets, analyzing the charts, hitting projected targets within the margin. Find the flow, sip the matcha, and wait for the waves to come in with lobsters. The kind-hearted Jordan Fosters, working smarter, not harder to move the markers. On his way to conquer, trading and investing, drinking the coffee while reflecting on the blessing. The markets are not crashing, the prices might be slashing, just to pretend they're in fashion. Take a like button, comments, and smash it. Boom, boom, Jordan in the room, grab the bull by the horns and to the moon. Flow from the plateau, make the play. Boom, boom, it's a taco day.
It's a taco day. It's a taco day.
All right. Wow. We got a lot going on over there. Let me start with this good one over here. 10% correction on the stock. That's not a 10%. That's not a bear market, right? I just want to go back to that area we were just looking at over here when we were in this big risk off period. We were looking at the Fed hiking rates, right? Were they political at the time? You have to wonder, right? And then we had Brexit going on, and let's see what the correction was just on the NASDAQ, right? Was it 18%, 25%? So the S&P must have been like 18%. Just let me get it right. I just want to understand what was going on. So let me check really quick, and then we'll continue forward. And because there's a point to all of it. That's March 2020. Sorry about that. Boom, 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 boom. So here we go. It was a 21% correction. So it wasn't an 18% correction. So we had a 21 and a 25% correction during that. And then, but here's the thing. This is when you saw the U.S. Treasury Secretary Mnuchin get on the phone with all of whoever, the who's who in the banking system. And they were basically like, listen, guys, this is it. We need your help. Like, plunge protection team in full effect. Everyone out making the calls. It's time to pump it. Donald Trump tweeting, this is probably a good time to buy stocks. And it was the low. So this is like where the Fed needed to come in. What will it be this time? Do you think that the market could come off 25% again before they would need to jump in? Is that possible? Right? Where does that take us down to, by the way? Just to have an idea, right? Just to have an idea. Or is it less this time? Because if you remember what happened in 2020, Uncle Warren Buffett sitting on the sidelines with $120 billion of cash money, waiting for things to be, for there to be blood on the streets, for him to jump in and buy, and he missed the train. The train left without him. The Fed was like, no, we're not waiting. We're coming right in. Boom. Are we going to be able to go, what will it be next time? I don't know. Is the risk, or is there a risk that there won't be a next time? I mean, here's the thing. We have to say there is. If we were just so blind to say that no matter what, they can't let this crash deflationary, that they have to come in, I think that potentially could be the undoing, right? Who knows what these diabolical maniacs are going to do? I certainly don't. Now, with a large degree of certainty, do we feel like that, well, they got to keep the music playing, they're going to do whatever it takes in order for them to try to make whatever jump they can to a new monetary system? Yep, the Great Reset is happening. Everyone has an agenda. And it doesn't look like that taking this thing down in a deflationary spiral is in their best interest. But nevertheless, let's continue to wait and watch. All right. So that goes more back to Run DMC's question. What if they hike to 2%, but they need to hike to 8% to stop inflation? So that brings us back to why I'm listening to Dr. Lacey Hunt. Yes, he got it wrong this last round, but he's got a long history of getting it right. And it's not easy for 3 decades, 4 decades to ride a trade like he did. There's no question about that. There's a lot of wisdom in there. Even maybe my old friend, right? The guy with the paper hat should be listening to a little bit what he's saying right now, because it might be time, right? Timing is everything. What would happen if they couldn't stop inflation? That's a risk in 2022 as well, right? Because of the bottlenecks and supply chains, and because of the psychological change in people's minds about inflation, right? Did anyone, buy Christmas presents in September? And why did we? And, was that also similar to the psyop that we saw back in January, February 2020, where we went and bought toilet paper? And why buy toilet paper, and why are you not buying medicine and antibiotics and blah, blah, blah? Who knows what's going on? So what would happen if they needed to hike to 8%? Is it impossible? Run DMC 555. Nothing's impossible. Remember, oil went and traded forward contract, June contract, to negative $38 a barrel. Nothing is impossible. The WT crude. So nothing's impossible. All right, but that's number one. It's the markets. Anything could happen. We want to be ready for everything. So I don't know why. I don't want to mention it now, but what I don't want to mention it now at all. So I am. Let's say, lost for words because I didn't want to mention it, but I am looking at what could be the best possible risk off play going forward for us, and when we could use that as a hedge. How about that? I'll just leave it at that, and we'll just leave it at that for now. All right. Let's bring this forward and keep going. Follow the money. That's why we're looking at this over here. What's next as the Fed works on tapering throughout the first quarter? Are they going to get to finish? Will they even need to raise rates, or will we come to a point in time where we're looking at, the narrative, and it's all about narratives. You don't even know what to believe these days. It's just narrative being pushed, from one person or another. Are we going to be seeing, well, actually, the inflation was transitory and everything's okay now. Prices are no longer rising and spiraling out of control. Now they're not going back down, but maybe year over year, they're kind of, within that 2% target rate that they want to steal all of your money from and all your purchasing power from. That could be. And then maybe there's no pressure for them to raise rates, right? And then maybe like, midterm elections over here. We need an excuse to get this thing pumping. So are they going to come on with the next impulse? If that does happen, if we go in from like the taper into a next impulse without a rate hike, then I feel a lot stronger that this is the playbook that we're looking at. And we talked about this way early of what the central bank's new cycle is. And it's for them to extend it out as far as possible. And what that might look like is the big impulse, right? Put on the brakes and then coming in, right? Here the brakes went off a little bit and then coming in, right? And then do they level out and come into the next impulse, right? And if they do, right, then this is the quantitative tightening. That for me is like the red signal that's when the countdown begins. Now, for a lot of people, the countdown begins at that first rate hike. From then on, they know there's an average of, I don't know what it is. I'm going to say between 18 and 33. I'm making that number up, but it's in that range, months until a recession hits. The quickest that ever happened was 11 months, right? So that's when for some the countdown begins. But I don't think that there's actually going to be a problem in the system itself unless they move towards tightening. Now, I believe personally, and this is not what the bond guys believe. We had this beautiful conversation yesterday on Twitter, right? With Bitcoin Lifeboat, with Sean, who definitely spends a lot of time in CTM. I didn't know who I was talking to in the beginning, but it was having a good discussion about the markets. And it wasn't until the very end that he let me know, right? When he was like, boom. Well, anyway, at the end he let me know, and that was a great way to do it. But it's my belief that if yields get out of control, right, that yields keep rising, that the way that they could crush them is going to actually be to begin quantitative tightening. And there's a lag after it. The lag could be up to a year or more, right? Or up to a year. But after that, that's when you will see all of a sudden the move back into bonds and the yields come down. So anyway, that's a little bit of a tangent today. This is something I wanted to also talk about. So I'm glad that this was brought up. Is this the tweet over here? When I looked at these predictions on Bitcoin, right? The one thing that I wasn't sure about was like, Bitcoin becoming a major electoral issue in the U.S. elections this year. That seems like a long shot to me. I don't see that happening until last night when we saw that Melania, please forgive my pronounce, Mrs. Trump, right, is bullish on Bitcoin, right? Was that actually the first shot fired trying to make this a political issue, right? And was that calculated? Everything that is done is calculated, right? Maybe it was little Baron who explained to her how the financial system works, and then she became bullish on Bitcoin. But let's see about that. So, what else? Jordan, I just wanted to, before I go any further, see what you were talking about over here, right? And then we still have more to talk about, so stay with me. I know that we've been talking for a minute here this morning. But, Jordan, going further, on your example of risk, perhaps it would ease one's mind to try to figure out a percentage chance that Bitcoin would have greater returns than the stock market over 10 years. Jordan, I don't know if I could back this one up with data, but how with an emphatic, there's no Bitcoin, the best performing asset in the past 3 years with the stock market going bonkers. If we're in risk on, there's no question Bitcoin is going to outperform. And if you look at it and just in the last year, now I measure from the 15th to the 15th here for this example, and you all know that. But if you just did the return of Bitcoin in 2021, 60 something percent, that's like owning stocks for 10 years. I mean, for 6 years, right? Or no, for 10 years, 6, 7, 8, whatever, 8 years. Point taken. Point made. Point taken. Jordan, there's no question. So the question that I have out there though, and I don't have the answer to this, is it possible that in, for example, 2022, you see that there actually inflation is out of control? Do we expect that Bitcoin actually catches up to the correlation of the 10-year if it becomes an inflation narrative? I mean, it seems to reason that there's a strong possibility that it would be. And then is it possible that if all of a sudden the markets get a little bit nervous because the Fed is looking to hike? By the way, I wanted to also mention that it's my belief or my understanding that when that hiking begins, I'm looking for that when the hiking begins, that the first hike was in 15, that there's still a long time. There could be some volatility in the equity markets or at the time of that first hike, because think about it. You're an investor. You're holding, let's say, stocks, and then you hear on the market watch that the Fed's going to raise rates and that's bad for stocks, and you get all nervous and you sell your stocks, right? And then there's a little volatility, and then all of a sudden stocks, back rising and rising for a long while, right? And then all that money that came off has to be put back into the markets. I don't know what kind of tangent we're on this morning, but this is what we're doing. All right. So let's see. No reason to be aggressive right now. Just leave that at that. So this is a good question. This reminds me of a question that the dean was talking about, and I want to talk about with you all a little bit. Before I do, I'm just going to take one little sip of matcha, right? And as I'm taking that sip of the matcha, I'm going to go ahead and thank you, Jan. I'm going to go ahead and, was it fake news? Did someone hack her account? I have no idea, right? I don't trust anyone or anything these days, but it seems to me if they wanted to make it an issue, that was the smartest way that they could possibly be planting the seeds to make that an issue. It seems to me we talk politics in here when it relates to the markets, and we talk about politics in here very like detached. We could care less, right? We don't put any faith in any type of elected leaders or anything like that. We're here to, as sovereign individuals, to go ahead and protect ourselves and our families and help create a future, right? So but it does seem those that are very political, like there are people who identify either like I'm on the right or I'm on the left, but it seems to me, and this is just an observer throughout all of this, that those that identify as I'm on the left and anyone who uses Bitcoin, they're like alt-right, and alt-right is for that. Like it seems like those people are making it a political issue. It's money, it's not politics, right? So, but if the other side is going to go ahead and use that to their advantage, all right. Well, I'll go ahead and I'll firm up my base around something that offers people freedom, and people that actually have like conservative values will really take to. I could see that happening, right? So I don't know if it's fake news or not, but we'll see what happens. There was something I was looking for, right? I doubt they'll crash it deflationary. We all do, because they will be blamed for it. Well, I mean, Run DMC, they caused the depression, right? It was in the money. That wasn't the money masters. It was in the zeitgeist about the financial system that I learned that they caused the Great Depression on purpose to consolidate power. And then it wasn't until Ben Bernanke at some point as Fed chairman at some like honky dinner was like, you know what? We did cause the Great Depression. I'm sorry. We won't do it again. Right? What was that? Like 80 years later or 70 years later or whatever it was. But yeah, could they possibly, you know, crash this thing deflationary if they think that they'll have a better chance at getting people to beg them to please implement this digital slavery upon them? Maybe. I don't put it past them. They are diabolical sociopaths. I don't know. Oh, by the way, I see stable dollar out there. That was one thing that regarding the possible regulation. I think what they're really gunning for is stable coins. I think that's more of a threat for them, and they want to have that control. So I think stable coins and DeFi, altcoins are more in jeopardy of any type of risk. Kim Basics, since we're at the end of a long debt cycle, interest rates won't be higher than 2.5%, according to Lynn Alden. The Fed has no problem with really high inflation. And you know, speaking of people who have got it right in real time, Lynn has gotten it right in real time, right? No disrespect to the quote unquote great Dr. Lacey Hunt, but if you missed what happened 2 years ago, well, you know, I'm sorry, we got to bench you. We got to put in our players who could win this game. And you know what, you had a great career and you did a lot of good for us, but I don't know. We'll look at you as an advisor. What do I mean by that? Well, I'm interested to know what you have to say, right? So I'm gonna listen to everything you have to say and take from it what I could. Massive respect for you, but at the same time, yeah, Lynn is getting this. Lynn is doing well in real time, right? And so, you know, what would happen? I don't know. So I was thinking in my head about, you know, that measured target being 2.38%, 2.5% is where we're getting really hot and tight. People are wondering what could they do, right? If they can't raise, I'm giving you the answer right now. People are wondering, well, how do they bring yields down if they can't raise rates higher? Because if they raise rate higher, the debt is unsustainable. So what are they going to do? In my belief, I raised my hand, you know, well, maybe they'll go ahead and institute quantitative tightening, because that will do it. That will break the system, and that will do it. So that's Happy New Year, Chris. We had it twice today. Right? Cove was as big as it gets. Well, that was risk off. That's the point I was trying to make, my brother. That, you know, we saw like that massive risk. 2022, are we up against anything like potential pandemic and global lockdowns? Well, it doesn't appear so. And I think if that type of scenario is setting up, that's something we're going to be able to read and see in real time and then maneuver. That's what we get. So thanks for bringing that up. I told you today was going to be about 94 likes. Guys, girls, ladies, friends, please smash that like button. Today we're covering a lot, and it's all very important stuff, right? And then Alejandro, before that was back in December 2018 or you know, November 2018, when we were dealing with Brexit, which was a great uncertainty for the markets, and with the Fed continuing to raise rates. I don't think we're in that type of situation right here in 2022. All right? Now, if it happens, well, thank you, my brother. If it happens, things could change, right? I don't want us to be locked into anything. If things change, we'll be there in real time to figure it out. Hold on one second. So, too much to talk about. And I just highlighted this comment, Julie. I'm going to come right back to that. But because there was another one over here. I saw the dean's name, right? And that brought me up to where I wanted to take this next before I even go back to anything. So let's start over here. And I want to answer this very, very important question that everyone here must be asking. they could actually implement public works projects that puts money into lower parts of the economy, right? That was like, what was that called under Roosevelt, right? I forget. That I feel like the way that China did it, by like, instead of like giving money to all the bankers, by going out there and building all this infrastructure and these high speed like rail trains. Now granted, your social credit score has to be like good enough to use it, but that seemed like a better use of money in my opinion. At least like they're not dealing with like falling bridges and old airports. But yeah, that would be kind of cool if they did something like that in the future. But what they are going to do, though, by the way, is we have slated $150 trillion going towards quote unquote climate change. That's where they're looking to go ahead and continue to have this debt-based system continue to grow from. So let's talk about this. This is a great question that needs to be answered. I'm going to read it verbatim before I get into it. I understand we have to keep evolving with the market. I believe we do see less volatility within Bitcoin for the rest of the cycle, maybe around the top, maybe mini bear and bull markets, maybe a smaller blow off top. So, I mean, thank you for articulating perfectly. I am right there with you, 100%, right? But I can't help referring back to when you said months ago in the mid-cycle dip that towards the end of the cycle, everyone will be saying this is the last cycle and the FOMO will be real. Here we go, boom, boom, boom. How do we combat that skewed mentality with the balance of evolving the markets? Is that even something to worry about right now, or should we just watch TA and take it day by day? I took note of how you said you may not be selling spot or a far smaller percentage, even if we had a blow off top, and hedging with leverage instead. This makes me question how spot traders could position and profit from the bear market if we do not sell. Thank you, Jordan. Let's crush 2022. So excited. Reading it again now, there's even more to unpack. And this is such a good comment over here. So this is definitely where I see us. I do believe we see less volatility within Bitcoin for the rest of the cycle, right? Whether that means around the top, mini bear, mini bull markets, maybe a smaller blow off top. But I can't help but remembering when you said that, so let's go back. I was expecting, and it's not off the table, but I was expecting a massive blow off top, right? Into let's call it potentially up to 350, the highest, right? I didn't like when that, I always kept the targets we had a wide range, right? I never said that the top potential move, and I even said it could go up to 420 possibly, that we could peek through as we've peaked before in the past. And I had 420 as the top rate, the top highest point of what I believe the range would be. Now, as we go forward, that becomes a little bit higher because I do believe it's possible to spike above the top. But I never put the max price as what I thought like the price was going to be. We had a window always, right? And I believe that we were going to come up by the end of the year. And I know that we're just coming out of the correction of wave 2 right now. And if you do that now, that puts us somewhere around early February. And we'll get into that when we need to get into that. It's not today. But I was expecting us to come up with a massive blow off top. And if that was happening, Dean and everyone else, at that point, I'm telling you, everyone is going to say that this time is different. That Bitcoin's going to $1 million and it's a super cycle and all of that. So that's the asterisk that I want to put out there when I say the difference between, well, how do we differentiate between an evolving market potentially and, that prices going into a massive blow off top and everyone is saying at that point it's a super cycle. Now, that's different than, and credit for his being far out early because it was in the summer that Willy Woo was talking about the changing structure and the dynamic. Now, I don't agree, obviously, where he said We don't have any similarities with the 4-year cycle but I don't want to talk about that now. But he did talk about early the changing potential structure of it, right? That's different than as price going up and then everyone getting like overly FOMO that this time is different. All models are breaking to the upside. That's what I was specifically referring to. And I'm sure hearing that that's really clear to you right now, right? So that's the difference of Dean and if we see that now even into the first quarter, Dean, if we see I'm saying first quarter to be loose, right? Because we have to be loose right now. But if we see the continued conclusion of this cycle here and the 4-year cycle reigns on, right? For us, it'll be determining, well, how overvalued do we get? Are we coming towards the orange line? And if so, well, maybe we're going to have a 60-70% drawdown. If we came up towards the red line, you know what? Hey, 80-85% drawdown, that has to be our base case. It's entirely possible, right? But I do believe that if we start seeing a blow off top occur and the cycle here, that a lot of people will move towards this time is different. All models are breaking to the upside. Bitcoin's going to whatever it is. And at that point, that would not be us like we have to like we're not like I still believe that the structure here is evolving, right? So I'm not, does that make all sense? I feel like I just got stuck at the very end there, but I really feel like we did good in answering that. So number 2, I want to share this again, right? This was shared with Cole yesterday. Hey, Cole, right? Wednesday, we went ahead and we watched this video in these 3 minutes. Michael Saylor's talking about the potential different market structure that's taking place in Bitcoin, because instead of having miners who need to go ahead and sell Bitcoin to fund their operations, we now have numerous public companies in the US that are Bitcoin miners, and they're able to go ahead and raise money in the debt markets, and they have different incentives. It's different, what do you think of that? And, so this is important, because this is part of that changing structure. Makes me want to take profit without taking profit. I'm suddenly that much more grateful for the existence of DeFi, right? And whether that could be executed in multiple ways, right? For someone simple like myself, that might be using like BlockFi or Unchained Capital. By the way, right before we went live, I just got in the mail the BlockFi Visa card. You get 2% back on every purchase of Bitcoin. I feel like, all the groceries I buy over the next year, over the next 10 years might be paid for. How about that? How about them apples? I prefer that over airline miles though. Unchained Capital, and it seems like many, many, many more are getting into the space. And you know what? He goes on to say, I'm not seeing any holes in the logic, right? Seems like something that we should be sharing with the community if you haven't done it already. He was watching yesterday's video and he was like, wait a second, what is making Jordan say that he might not want to sell his spot Bitcoin, and why? After seeing this video, well, me too. It makes me want to take profit without taking profit. The question came up over here by Dean. Well, how could someone who's not using leverage go ahead and potentially take profit, right? So when I refer to something, was this helpful, seeing the different colors, like letting us know what zone we're in? And by the way, could you put in the comments what zone you think we're in right now? I feel like we entered into a yellow zone, right? Similar to the breakout of the descending wedge. Once we broke out of the correction of wave 2, I hope that it holds. We don't know, right? So I feel like we're yellow. If anyone I want to know your all's opinion though. So let me know. How did I get there from where I wanted to go? I don't know. But leveraged, right? So I think that a great way to go ahead and accumulate Bitcoin is in green phases, trade smart, calculated with good risk management, and hopefully we enter into that at the end of the cycle here, some type of blow off top. Now, whether or not it's a massive blow off top, whether or not it's a more subdued blow off top, or if it's a rounded top, hopefully we have another push in here that, is similar to things that we've seen going back to this massive push in January through July of 2019. Then again at the beginning of last year, this is a 6x over here in a short amount of time. Could something like that, if something like that occurs, and we're remember like leaning in off of wave 1, wave 2, the whole purpose or idea was to be able to push that to that accumulation. It didn't happen. We had a technical breakdown. I took profits, right? Got neutral and then started now regaining back in. Hey, we're in a red area when I did that. I'm not. This is when in the green areas where I feel like, all right, CT. But anyway, so I feel like if we get a big push, you could do a good job on leverage of being able to accumulate a lot of Bitcoin. But that's only if the market gives it to you. You just saw when we started positioning off the bottom of wave 1 and then in the correction of wave 1 into wave 2 that, well, we didn't get to push it. We had to take profits. It's what the market gives you. And if the market gives that, that's one opportunity to do that. If you're not doing it and you're just holding spot Bitcoin, what's another way? And I think it's all complicated. So you have to spend time with it, talking about it. If Bitcoin comes into the zone over here where you feel like, you know what, might want to go ahead and find a way to take profit without taking profit. And what that means to me is going ahead and borrowing against your Bitcoin to access liquidity that you don't have to pay taxes on. When you borrow Bitcoin on a lending platform like BlockFi or Unchained Capital, it's a loan. It's not a taxable event, right? So the whole idea is, as Michael Saylor puts it, if you find the best, most pristine asset out there, you don't want to sell it. I've told you my mistake of buying the Facebook IPO, of buying the then Google IPO and selling them. I should never have sold either one of them. I thought I was a hero back early, like 2003. I'm guessing the year 2002. Apple trading at $22 and just having a feeling Apple's going to make this like massive comeback. This is just when I've begun speculating in the markets, by the way. And do you think I would have held Apple these 20 years? There's no way. Guaranteed it went to $50 or $100, I would have sold, right? The whole idea is not to sell your Bitcoin, but what happens over here at this area, you're able to borrow against your Bitcoin. Well, that puts you in a let's say a risky position. How? Well, if Bitcoin comes off 50%, which it probably will, you at that point are getting some type of margin call where you need to be able to post collateral. What does that mean? Well, that means up here that you can't take your whole stack and borrow against your whole stack, right? Because if that happens, so does it mean maybe, and I'm not working out the math here. I'm just giving you examples. But does that mean maybe that you could only borrow against half of your position or a quarter of your position, right? And that way you have the collateral to add already set aside for when you understand that Bitcoin's going to come off 50%. That's one way to do it, right? So that's where I'm going to stop, but only because I didn't spend the time thinking it through of what I wanted to share with you, but making the point for sure. Now, other people, they might have, they might be able to say, all right, I'm going to, borrow against 50% of my physical holdings over here. By the way, when you do that, there's an added risk. It's third-party risk. What happens if BlockFi goes bust? You could potentially lose all your Bitcoin that you had as collateral there. It's a risk. There's no question about it, right? What about the boys at Unchained Capital? They're probably taking a lot less risk than BlockFi. I think you'd sleep better personally about what about using both of them and diversifying your risk? What about that when Bitcoin came off 50% here in a matter of days, that BlockFi did not, handle it like a champion. There were no bailouts. Why? Because people who, they got the margin call, hey, you have 72 hours to post collateral. Otherwise, we're going to have to go ahead and sell some of that collateral to bring down your loan to margin, loan to whatever it is, right? So should you have trust in them? Maybe confidence. Don't trust anyone, right? Not your keys, not your Bitcoin, and there are risks involved. That's one risk that everyone should be aware about, though, is that third-party risk. And there was something else that, some people also, they might have they might borrow against half their position up here, right? Have that other half in case Bitcoin goes down, that they know that they could go ahead and be protected and have that collateral. And they might spend the next 12 months, making payments down, right? From their income, making payments down towards their loan and starting to pay off that collateral. Because maybe that they don't want to go ahead to pay back the loan. They don't want to have to sell any Bitcoin, right? Even if it's capital, long-term capital gains that they're paying on it, maybe they don't want to sell their Bitcoin and pay any. So I hope that's good for beginning. How about that? Yes, we have, Andy. We haven't. That yellow. How does a failed breakout justify a change from red to yellow? Hold on one second. We're talking about all this. I want to jump in with all of you and make sure. So, all right. Boom. How does a failed breakout justify from red to yellow? Well, is this the area you're talking about? I'm trying to get into it. This was the descending wedge, right? And I called this out as it before it broke out to the upside, and I don't think I called it out before it happened. There's no question. We were on that early. Let's put it that way. And then we had on Twitter the breakout, retest, and the resumption, right? So that's when we go from red to yellow, right? This was probably a good point to but there was a lot of uncertainty out there still. There was still a lot of uncertainty out there. And I did not lean in hard to it. I waited until we came close to the most important trend line in crypto. As we came into it on the pullback, I said, that's the one. And then that's when I went and started trading again with a good deal of leverage. So Les, does that answer the question? Is my question to you, right? That's what happened over there. It looks more like a downtrend, June, July. So this was a red area. That I'm just explaining why we left red to yellow, and that was the breakout of the descending wedge. That's a bullish pattern that sent us a lot of CTM, right? I bought spot at 39,000, and then 32,500. I think those numbers are exact correctly. I was buying spot. Red, by the way, is a time to buy spot, right? But unless there's nothing easy about it, fam. If you're in a bear market, you don't want to be buying spot in the red, right? So if you do something simple and you're like, let's go ahead and draw up, the true trend. And I'm like, well, generally speaking, when you're in a red area, that's a place where you want to be accumulating spot. Bitcoin, well, not if you're in a bear market, right? So if you're in a bear market, right, you want to be out, you don't want to be holding. That you don't want to be accumulating, but you want to kind of that's when you want to be on the sidelines, right? If you're accumulating in this area over here, let's call it from 9,500, then again in 7,000, I take it back. This is not black and white. I don't mean to, you could hear the uncertainty because on a long, depending on what your time frame is, even if you're buying during these areas right here, they're going to be beautiful, not too long after. But I think that we try to be a little bit more accurate than that. And that's why if we're able to see price move up, in towards this above the white, closer to that orange, at that point, if we see a blow off top, we're expecting bear market structure, one way or a form, to be taking place. And at that point, it wouldn't be like, oh, red's a good place to buy spot. It would be like, stand aside. Stand aside. So we got it out at the end. On the current trend, so the current trend of why I believe that we've moved from red to yellow was simply the breakout of the correction of wave 2. Does that make sense, Les? For me, that's I don't know if we're correct on that. I mean, I think for me that we're in yellow, right? Only because we've had the confirmed breakout of wave 2 over here. Now you all know, because I've talked about it so many times, watch out. We could see this happen, the breakout, and then taking out that low before skyrocketing up. And that's still in play. Like, we could take out these lows over here, right? Maybe not the low of the wick down to 41, maybe, but we could take out these lows over here. There's a lot of stops down over here for sure. So I feel like cautious yellow, right? And then if we took down those yellows, by the way, oh, Les, this is great. I'm so glad you said this. If that did happen and we took out these lows down over here, at that point, we go from yellow, even though it's short, back to a red. All right? That's that. I think that part was missing because you guys can't read my mind, and I wasn't able to tell you what I was thinking about earlier. But that could very well happen. I mean, I believe we're in yellow. So I want to go ahead and put a yellow over there. But we could go back to red for sure. All right, we go back to red if we have a technical breakdown. All right, I think we did it. Yeah, Bog, yes, a lot. And then tomorrow, yes. Last night I was spending a lot of time with gold, and I'm like, oh, gotta put gold back onto the Cayenne list. 2022, I don't know. Gold might be a thing. So yes, tomorrow though, because we covered so much today, and so for tomorrow, let me go ahead and make sure I got a screenshot of that. So Jordan, this is great. I mean, so a market is market, and you have various participants looking at the market, and that includes technical analysis, because there's so many different ways to apply technical analysis. But there's no way. No. You could look at Elliott wave is one form of technical analysis, and Elliott wave is entirely subjective. So you could have a 100 Elliott wave experts looking at a chart, and they could all have different counts on it. No, it is all subjective. There's no question about that. Thank you, Zach. That it's the community for sure. There's no question about it. I am honored and privileged to be a part of it, and I'm grateful for you being here, adding to that and participating in that. All of you. There's no question about that. It was a fantastic session. I feel like we really, really, really covered a lot, and that's the thing. If you miss some of these sessions, I mean, you can't. That's okay, but there's a lot to learn in each one of them. The value is high, and I'm glad to be doing this with all of you. That was one thing I forgot. We have FOMC minutes tomorrow, right? Do I expect it to be I do expect it to be a non-event. What are the surprises that could happen? Powell was pretty darn hawkish, at the meeting itself. So I guess the only surprise could be that you hear my tone. I don't know, but could the meetings actually be more dovish than expected? Everyone expects the Fed to be hawkish right now. The Fed is hawkish right now. So is it possible that the meeting minutes come in a little dovish? That's kind of a non-event for us, right? So yeah, I don't think that we would have any let's say risk on surprises. Thank you, Jose, very, 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 very much. Thank each and every one of you. Right, this is a good one because we setting the tone here for 2022, discussing a lot of stuff that needs to be discussed in a roundabout way, but I think we got it done. Oh my goodness, Jen, you got to go back and watch the first half. I think there were things in there that were important. There's no question about it. I really do. Thanks for being here. Thanks for spreading that light, that love. Wes, I think that we sweep the stops at 45. If we sweep 45 because they bought 46, that would be pretty good, right? We're just a little patience right now. We call for some patience. That was the word of the day yesterday. All right. I think we're good. Oh, BlockFi card. So I think the easiest way to do it is I think if you search BlockFi card, that you'll find out how to do it. You just got into your BlockFi account on the top menu somewhere. There's an option for it. I don't know what it says today. I'll make sure for you tomorrow. I could tell you. But in the meantime, if you want to get it done right now, Corey, just search BlockFi credit card, and then you'll be able to do it in no time. I'm glad to have it. I feel like, now instead of getting miles, buying food, get some 2% Bitcoin, and in 10 years from now, that there's a strong possibility that all that food was free. All right. So, Silver Johnson, BlockFi, I think they offer 3 or 3.5% the first 90 days. I think that's what it is. But I think it's 2% after that. So if someone could clarify, that's awesome. If Bitcoin peaks at the end of the first quarter of 2022 and So, Gio, here, if that happens, this is a great question, right? Am I going to be taking more profit from spot Bitcoin? Yes. At the same time, the one asterisk, and this is why we have to do what we do every day, what was going on in the macro landscape would be entirely relevant. Because we talk about, the status quo is the status quo most of the time, but when things unfold, they unfold quickly. So a perfect example of that was March 2020, February, March 2020, right? That all unfolded very quickly in the markets. I'm looking at a chart of Bitcoin, but in all the financial markets, right? That could happen to the upside with Bitcoin. You could see, the market is very small. People it's $1 trillion market. How are you going to move $1 trillion market? It is so small when you talk about the hundreds of trillions of dollars out there in the financial markets. And if you start seeing, picture a hole in a dam, and then it breaks and it kind of explodes, right? If you start seeing that type of money, that capital inflows flooding in, so there's a difference between, Gio, that you're seeing 4-year cycle nature play out on time. And then that would lead me to take a lot more off the table if we came towards that red zone, that as opposed to seeing some type of changing dynamic in the market. And all I could say, if it's happening in the first quarter, as you noted, there's a strong chance that's not from a changing dynamic, that is Bitcoin 4-year cycle nature taking place. At the same time, I can't just be black and white and give you some type of we have to see what is happening at the time in order to make that decision. Gemma, I could do that. I will do that to make it very easy. And please, if I forget, please remind me tomorrow. Silver Johnson, that's more. I will check out for sure to make sure that it is beyond 90 days. I think it's a promotion of 3.5% for the first 90 days. And then I think it goes down to 2%. But I will tell you the specifics specifically. Thank you. Thank you so much for being here, everyone. All right, everyone. Tomorrow we'll do it again. I hope you all have a beautiful day. May God bless you, and I'll talk to you soon. Jan, Happy New Year. What a good first session to be here for. Right? What a good first session. Thanks, Jesse. Thanks everyone. Thanks, Wes. Jose. Everyone have a beautiful day. I'll talk to you tomorrow.